Welcome to Insured Investors, where we share practical real estate investing tips with an insurance twist. I'm your host, Brooke Beats. Let's get started. Similar to other real estate investing relationships, like lenders, contractors, and more, maintaining a relationship with your insurance agent is vital for a successful business. While most investors will agree that insurance is necessary, they don't realize how they can customize their policy based on their investment strategy. So today, Scott Cronin, INREG's Program Managing Director, is sharing why it's important to maintain a relationship with your insurance agent and other tips for success in insurance. Welcome back, Scott.
Well, thanks, Brooke. Glad to be back again. It's a good topic.
Okay, so let's dive right in. Let's start with finding the right insurance agent. What are some things that investors should consider when choosing an insurance agent they trust with their business?
Yeah, so I think there's a lot of things. I think the first thing I would probably point out is just willingness to educate and provide explanations to the client. So a lot of that comes down to education, right? I mean, we want to educate our clients, but in order to do that, we have to be educated as agents ourselves. And there's so many things to know, and the policies have a lot of information in them. So I think, one thing about us is we really spend, well, first of all, you have to use a license is required. So there's a lot that goes into obtaining that license, studying, et cetera, and getting the test, maintaining continuing education. But it goes further than that as well, because there's so many changes in the industry. There's so many changes with policies, maybe even with the carriers, and we have to stay abreast of those changes, learn about them, stay on top of them, and be able to educate our clients what those are, when they happen, and help them kind of keep up to date with those. I mean, we spend a ton of time in education monthly, going over learning new things, and it's just a piece of our culture. So I would say that's the thing that I would point out first of all. Another thing is just having the ability to find the answers and the options. We have a team of 24, 25 agents, right? A lot of different levels of experience, a lot of different backgrounds. Our leadership team, we have picked people in our leadership team that come from a claims background, underwriting background, and it's just so valuable to have that resource when those kind of questions come up through a client that, maybe it's not readily on the top of someone's mind, but we have that resource to go and find and get those answers when needed. The other thing is that's a little unique with us is, we support and help investors, right? So it's a little different than maybe just the run-of-the-mill insurance program. So it's being aware and understanding what those unique needs are for investors and how that is different than just a normal owner-occupied property. One thing that comes to mind is like occupancy status. It could be something where, maybe it switches from, maybe you have a renter in place today, but then they leave and all of a sudden the property's vacant. Well, we need to know about that, and we need to know what the difference, what that means, and how we insure you based on those changes. So it's just one of those specific things that I like to throw out and that I feel is important. And then also, we want to know your portfolio. We want to get to know what your unique needs are. We want to grow with you. We've had people that come in and, maybe they have one or two properties, and then over the course of a few years, that grows to 10, 12 properties, and so on and so on. We want to get in early with you, know your business, know your goals, and help you support those goals so you can grow and we can grow with you. So that's what I would say.
That's great. I really like to think of it as like building the relationship with your agent. Like you're paying for a service, you're paying for insurance to cover your assets, but you're also paying for the relationship and the education from the agent that you're getting. So I like to point that out.
Absolutely.
Once they've found an insurance agent they trust, why is it important to maintain that relationship?
Yeah, I touched on it a little bit, but, more personalized service and better support. As we learn your goals, we can offer those personalized strategies and help you kind of find places to save. We like to say, what is it? One size fits none. What does that mean? It's basically, we know everybody is a little different. Like I said earlier, we have some clients that have, maybe one property that they potentially, let's say they inherited it from someone. They've never been an investor before. So we can help that person as a new investor to better understand their needs. And then conversely, we can also help those seasoned investors that maybe have been around for years and years, have hundreds of properties, and they just need a little help with, what is insurance? What is it that we can help you with? Maybe we can help you be a little more consistent, just think through, are you covered correctly? Are we thinking through all the unique challenges that you as an investor might have?
How should an investor build a long-term relationship with their agent?
I think communication is the thing that probably jumps out to me the most. You think about it, insurance. It's not probably everybody's favorite topic all the time to talk about, but especially with someone who has a lot of their assets tied up into real estate, it's their livelihood. Probably really busy people, right? And it's not something that they want to really think about a lot. So let us take some of that, for you. When you have changes, like I mentioned earlier, like the occupancy status, things like that, if we don't know about those things, it's really tough for us to keep on top of having you insured correctly. So going back to communication, it's a two-way street. We do our part to reach out and say, hey, we haven't spoken in a while. We do our part to, we basically send out periodically little, emails or whatever, just saying, hey, look, let's do a review of your whole portfolio. Let's make sure that, we're on top of everything, make sure you're where you should be. But we can't do it all. It's got to be a two-way street. You have to let us know when those changes take place, when you buy and sell properties. And, it's a partnership. And it's in my opinion, it's much better to have someone in your corner, someone that you're working with that can kind of go with you down that path.
What should an investor expect to discuss during those annual policy reviews or anytime an agent reaches out?
Wow, that's a huge question. There's so much nuance with this. A few things I would say. First of all, like your policy, how it's set up, with the moving parts. With maybe you're changing partners, maybe you're changing lenders. We have to know how those how it's set up, how the what's the word I'm looking for? Named insured.
Yeah.
How is that set up? Who's getting paid out in the event of a loss? If you have a policy in place, you have a loss, and that's incorrect, that check's going to be potentially made out to somebody that it shouldn't be made out to, and that just causes a lot of issues. Something else that jumps out is, again, I've mentioned this a couple times, but occupancy status. Let's say you have, 50 properties, and they're all in different stages. Maybe it's new construction, maybe it's a vacant property, maybe it's a buy and a flip, or maybe it's tenant occupied. All those things change over the course of the year so much, and if we're not correct in how we have that set up, again, in the event of a claim, you may not be paid correctly or at all, depending on how that's set up. So I think that's a really big one that jumps out to me. It's one that if I was going to lose sleep at night, that's the one that would kind of make me a little worried that if we're not having that communication, that could get missed. Another thing is, how's your risk tolerance changed? Or has it? Maybe it hasn't at all. Maybe it's the same. It continues to be the same. But as rates change, as just the market changes, you might also have a little bit different philosophies on that as you grow as an investor. Deductible amounts, $2,500, $2,500, $5,000, $10,000. With those different amounts, that can impact your premium. So if your risk tolerance changes a little bit, maybe you save a little money there, or maybe it's the opposite. Maybe you or maybe you've seen some things out in the world and you're a little more concerned that something's going to happen and you want to drop that deductible a little bit. So that's one thing. We have a couple other different things, like we have a basic and a special form. You know, the different causes of loss that come into play. You know, maybe in your situation, theft is not a big deal for you. Where you live, it's a safe area. You're not really worried about it. So why would you want to pay, you know, a premium for that if you don't really need it? So you can think through those kind of things. Ancillary products. You know, there's a lot of holes that potentially could be filled depending on your needs. Like, do you want flood? Where do you live? Do you live in a floodplain? You know, terrorism, earth movement, tenant protector plans. You know, we have all these things. And with those, back to your previous question, there's so much to know with each one of those ancillary products. And we are the experts in that. You know, again, we get that education. We stay on top of how those things change and what they can do for you. So yeah, that's definitely something we talk through in that yearly review, or when we try to set up those yearly reviews. But you know, overall, I would just say, think through, like, in your situation, in the event of like a total loss, your house burns to the ground. Keep that in mind when you're thinking through this stuff. Like, what would you do with that? Would you rebuild that property, you know, from the ground up? Would you, you know, did you get a great deal on it and you probably just take the claim payout and maybe move on down the road and not really fix anything? I mean, those questions, again, that might change in how you think through your philosophy on those and your different properties. So all those things we can talk about, and we should be talking about as we have those yearly reviews. So that's kind of where it's a lot of information.
That's great.
That's kind of what I would say.
Yeah. Do you have any last minute burning advice for the viewers?
Well, I mean, I touched on so many different things, but I think just to reiterate, I mean, look, here's the bottom line. You're paying a premium, and it comes with expert advice. You don't have to pay extra for that. You know, we have a team of experts that it's simply a phone call away. We have people on staff ready to answer a phone call from 8 to 5, and email that's always there. You know, we come in the morning, we answer those questions that come up. You know, the other thing I think I might have failed to mention, but when I think of client first or customer service, when I call somebody and I don't get a live person, it's so frustrating. We're staffed in a way where you should get a live person anytime you call.
Yeah.
And we're here to help. We're here to answer those questions, provide that expert advice. So I know I kind of went back and forth on that, but I mean, that's the thing that really jumps out to me and that I want to reiterate. And the other thing is, we're not here to sell you any particular product. We're here to learn what it is you're trying to accomplish. We're here to get a feel for that risk tolerance that I mentioned, and to service based on what we learned about you. Not to sell you something just to make a little bit of premium here and there.
Yeah.
That's not our goal here. Our goal is to build that relationship, build that trust, so it's a long-term relationship. So I mean, that's kind of how I would wrap it up, I think.
Okay, very good. Are you ready for the game?
I'm ready for the game.
For our game today, we're going to have you rank 5 real estate investor relationships without knowing what comes next. So it's like a blind ranking.
Okay, I'm ready.
Number 1 is the most important, and number 5 is the least important.
Okay, 1 to 5. Gotcha.
You're ready.
I'm ready. Bring it.
Real estate agents and or realtors. That's 1.
I kind of feel like that's kind of important. I mean, there's probably some investors that are their own agent, I would assume, but those that aren't, if you know you're trying to build your portfolio, you need someone on your team that is kind of out there searching for other potential opportunities. I'm going to put that, like, not knowing what's coming next, I'm going to put that like at a 2.
Okay. Lenders.
Well,
Gotta have some money.
you got to have some money in order to buy properties, unless you're just independently wealthy. But
You can't tie for 2.
yeah, that's probably what I would have done. Let's go 3. Even though if I would have known about the lender one, I might have put that above that. But I'll just put 3.
Okay. Other investors.
I mean, I think it's a nice to have, but I don't know that I'd put it at the top above the other 2.
Yeah.
So I'm going to put it at the bottom.
Yeah.
Number
Good
5.
for advice and talking through stuff,
Yeah,
but you really just need them to get out of your way.
Yeah, sure. Yeah, let me buy it, not you.
Yeah. Tenants.
I mean, I guess it's important to have a decent relationship with your tenant, but really you just want the check. So I probably would have put them at number 5, but I'll put them at 4.
Well, you need them.
Yeah, you need them, obviously.
You don't have business.
But really, just you don't want the check and you move on. I guess it's good.
You want the money and no holes in your wall.
Exactly.
Insurance agents.
Well, obviously, I'm gonna put that at the top. Since the whole conversation has revolved around that importance of that, so we'll put that at number 1. I like that.
Okay, so you have insurance agents, real estate agents, lenders, tenants, other investors. You feel good with that?
Yeah, I might. If I would have known, I might have done it a little different. But I am a little biased too, so I still would have kept that insurance.
How would you have done it differently?
Maybe the last 2. Maybe what was it? Tenants and
other investors.
Yeah, I might have switched those. Maybe
tenants at the end.
I don't know.
There's no right or wrong answer.
I can see the number 1 and 2 could be very interchangeable.
Mm-hmm.
Yeah. So I'm good. I'll leave it where I'm at.
Very good.
Yeah.
Thank you so much for coming back and sharing your plethora of wisdom with us.
Absolutely. I appreciate you inviting me. It was a good time.
We'll continue to post new episodes on NREIG's YouTube channel, that's NREIG, and on Spotify and Apple Podcasts at Insured Investors. You can also follow NREIG on Facebook and LinkedIn. See you later.